Hello everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having an amazing day. Happy Wednesday to you here. And of course, we're going to take a look at Bitcoin, see what's going on, help understand best practice, big picture. We're going to look at some CPI dates here. Just want to kind of point that out to you as well, where the consumer price index has released inflationary type of information, so to speak. We saw that today, of course. I think it's 9.1%. Definitely, I would say more than was expected, but not like terrible thing, but obviously it sent some ripples in the market, because if we take a look, we saw some gaps down from the S&P and NASDAQ as well, and then of course dollar index is effectively down, allowing Bitcoin to possibly recover. So again, there's a handful of different things you could think about, but what I want to show you is some of these specific dates. So if you're new to the channel, not a financial advisor, just love teaching people to trade, hope you can learn something here today if you want to become a better trader. CryptoCache.tech is a site, link in the description below. Okay, check that out. Let me know if you have any interest. I do actually offer discounts for military and third world countries as well. So message me direct with the contact information in the comments below. I'll never direct message you or try to solicit you. All right. So again, here's kind of where we're at with Bitcoin. So these dates that I've marked here, essentially with the arrows, the last one was June 10th, and then before that was May 11th, and then of course April 11, or I believe it might have been actually 12. But regardless, you can kind of see the common theme here. In other words, the previous time frame that we saw, of course, this was the first time that it was really like things were coming to a head. We could see that this was the very first day of many red days to follow. Okay, so that was when the most recent CPI data came out, whereas inflation was higher than we expected. We saw a very similar thing today as well. So could we anticipate the same kind of price action? I would say we don't want to rule it out, but is it a strong probability? I would also say no, because we're still holding our trend line and we're really close to that same level of average price that we've been needing to hold above. Okay, so it is a point of contention. There's no doubt that we drop below this level, 19,000. There's a good chance we'll see it continue lower. But for the moment, it would be best to anticipate that we're not going to see that, and try not to buy into the fear, uncertainty, and doubt, even though it's a very real thing. Okay, so again, the most recent time frame, price came down. The previous time frame from there, May 11th, we can see that we had a very large doji type of candle, as well as a doji candle to follow, and then of course a slight recovery and sideways action from there. Okay. Last as well, at least the last one that I marked back in April, was effectively a very similar situation, whereas the price action came down and inevitably decreased. So you could disseminate from this here that each and every time these things happened, it proceeded to go sideways and then drop. Okay, so sideways and then drop. So hypothetically, we take that same school of thought, we could go sideways, get rejected this trend line, and drop. Okay, there's a possibility of that. So again, based on previous data and kind of what we're seeing here so far, it does seem more likely than not that we might see more downside. But here's the positive. We are still honoring this ascending trend line, albeit not the best, most consistent trend line. It is, I wouldn't say it's not inconsistent at all, but the bottom line is it's not like the strongest ascending trend. It's a very slow trend. In other words, it takes roughly 2 weeks to increase the average price by maybe about 200 or 300. So that's a very small difference. Again, not the strongest type of trend line, but it is a trend nonetheless. We're still holding above that for the moment. So to me, that's a positive as well. Let's take a look at some other things here. Also, what we can kind of look at is RSI is getting closer to 30. So as long as we stay above, we should be in good shape. If we do lose, just say 19,200, that most recent low, then we're going to effectively be in a position where we might actually see 30 on the RSI tested and it come below. There's a possibility of that. But for the moment, things are looking pretty decent in the overall sense of things. I don't think we're in dire straits quite just yet, but again, if history repeats itself, we could and very well should see some type of decrease in the next couple of weeks, hypothetically. Okay, it may even come a lot sooner, so that potential of 14,000 might actually get tested. So again, that is a worst case scenario. I don't think we're going to see anything tremendously lower than 14 if we were to, but it's best we prepare ourselves for it. But I wouldn't just sell everything and just go crazy right now, because again, dollar cost average wherever possible for the moment is probably the best strategy you could apply. Okay, so again, try not to overwhelm yourself with stuff you can't control. It's just kind of the way the market is right now. But the good news is this 4-hour candlestick is shaping up to be pretty positive. What I mean by that is, even though the price action is pretty much right here in the middle and it's lower than where it originally opened. We have a very large candle wick down below, kind of implying that there is a lot of buying pressure in this area, and then it recovered quickly. We can see that on the smaller time frames, but again, it just kind of reaffirms the fact that we might actually see a MACD convergence still, albeit maybe not very super strong, but there's a good chance we should see a recovery here soon, just based on everything being overextended as well. And we saw how large this overextension took place. I mean, that was a full extra 24 hours practically, if not more, of further downside after it was already overextended. Okay, and we're coming close to 30 on the RSI as well right now too, so it would make sense that we get a bounce to the upside. Again, that's the way things should work. The way that things do work is a lot different based on CPI data, of course, and that fear, uncertainty, and doubt that starts looming in the industry. Good news is the traditional market's gapped down, but they're almost at break even. They're not doing completely terrible at this point. They've recovered somewhat, and in that regard, that's a positive sign. So I think if the traditional market can maintain itself, we'll also see Bitcoin hold steady. Again, hard to say specifically. We got a lot of conflicting information, but generally speaking, the TA on the 4 hour still looks pretty decent. This is a nice candlestick that is soon to close in 10 minutes, and if we were to close just a little bit higher, it'd be fantastic. But the bottom line is you can see it's trying to recover and not really willing to go tremendously lower. We can also see an increase in volume here, of course, not quite as substantial as previous time frames when, of course, we had some releases on Binance exchange. But what I'm getting at here is that this is a lot of volume, and the price action didn't technically go below that support level. That's a pretty positive sign for the moment. You could effectively say the bears are exhausted, and the likelihood of an increase from here is higher. So again, I think we're looking more positive than negative in that sense. And here's kind of where you can see the damage, of course. CPI data release right here at this point, or just before the release, pretty much at that same time. You can see the price action came down and, of course, has since recovered. So again, it's not like a full-on recovery. I would say we would want to get a closure above 19,800 to have a good, decent leg to stand on. If we get a closure below 19,000, though, I would expect further downside. That's kind of the way that it's shaping up. But I think a closure anywhere between 19.2 and 19.8 would be fine, preferably over 19.8 just so we can get that kind of positive momentum. But for lack of better terms here, the hourly doesn't look terrible. It's definitely looked better, but we're still under the cloud, and we got to acknowledge that, okay? So long positions right now, I would say, are not exactly recommended. We're leaving our long position open, at least I am, because of the fact that I think that we're going to still see a recovery. I personally feel we're going to be able to hit our targets, but between now and then, I mean, we look at this here, though, this is something that's positive in a small sense to the long side, is that we do have the lagging span soon to intersect with the price action. In fact, it had before, and it pretty much shouldn't even be here in the first place because we should have already had, we shouldn't have had this happen, right? If it wasn't for the CPI data, of course, we'd probably be going sideways and up right now. Instead, we're just kind of breaking even, and that's pretty standard. But the bottom line here is that conversion line, that's the lagging span. The conversion line and the baseline, basically the conversion line is still above the baseline. That's a positive sign. And we got the lagging span here effectively almost intersected with the price action and just previously did that. So that basically tells us that if you had a short position open, you should have closed it by now because it's losing that downward momentum, and the likelihood of it breaking above the cloud in the near future is fairly high. So do I think we're going to see a retest of 20,000 soon? Yeah, of course. It would be important for us to break there, though, too, because once again, right here at 19,800, we got this fairly consistent trend line that's essentially a support and resistance level, depending on which side you're on. So again, a closure below that level would not be ideal, but once again, I think anything in the 19 to 20,000 range for the next couple of days would be perfectly fine. Build that volume base and then increase from there. But all in all, we're not in dire straits here. I don't want you to think, again, I try not to just buy into the crazy nonsensical stuff that happens when this data is released and things happen. Again, it's par for the course right now for the things to kind of hit the little reset button. A lot of shorts and longs got squeezed out, but generally speaking, I think at this point, it's best to dollar cost average. Try not to worry too much about, buying, consistently buying low and selling high and doing all that whole stuff. Because honestly, it's nice to have that as an additive. You want to position size effectively as well and use good risk tolerance. But generally speaking, I would say dollar cost average is the best effective method right now. Because with this being a bearish type of market, the best thing you can do is continue to, stack basically USD or, whatever currency you have in Tether, essentially aside, as well as, of course, Bitcoin, accumulating as much Bitcoin as possible during this time frame. Because again, the reason why you want that is because later when Bitcoin's worth more, you can use that to effectively buy altcoins. Because there's typically a lag between Bitcoin coming up and altcoins emerging, so to speak. So we'll see here soon what's going to happen, but I'm not really super concerned with this. I don't think this is going to kill us. But hey, we got to acknowledge the simple fact that anytime we've seen this in the past, again, this has been a weird year for us. Until we break above this trend line, we can expect the price action to come lower. So there is a decent chance we'll get rejected at the trend line and come back down, possibly retest 23,000, come back down. But it does seem almost inevitable based on this recent history of what happens as soon as the CPI data is released. There's always some type of shelf where the price will fall off. Okay, so again, this time frame here, you got to keep in mind there was two datas that came out in the same time frame there within that 1 month. And at this point, with us having this here today, we'll see what happens in August. Because again, next month we have another release as well. So that's kind of where we're at there. Not much else to really note. I don't want to keep going in circles. I think you get the point. We'll see what happens here today. We can get a closure though in the 19.5, 19.8 range. We'll have a nice solid doji candle signaling a reversal. We're still closing above the trend line potentially, and that's a positive sign. Okay, so try not to overwhelm yourself with too much information, I guess you could say. All right, hopefully that helped you answer some questions. Hope you have a good rest of your day. Thank you so much for your time. If you're not currently a community member, consider joining. CryptoCache.tech is a site. Got a lot of new members coming over here recently to attend my trading academy and to benefit from those signals. So check that out in your own time. I hope you have a great rest of your day. Thanks again for joining me here. We'll take care. Bye-bye.